What will be the impact of moving away from the zero-COVID policy? What are Beijing's long-term plans? What does the Chinese economy look like at this point, and what is the outlook for Chinese stock markets? About that in the moment. Welcome everyone. Let's move on. At the beginning of January, China began to move away from its zero-COVID policy. After 3 years, China is opening its border with Hong Kong and ending the quarantine requirement for travelers, removing the last pillar of the zero-COVID policy. Recent data shows significant improvements. Patients in hospital have dropped 79% from their peak. Center of Disease Control said the number of certificate ill patients in China peaked on January 4 at 100,028 cases and fell to 36 cases by January 23. The number of deaths in hospital meanwhile reached a daily peak of above 4,000 on January 4th and fell to below 1,000 by January 23. Visits to favor clinics fell 96% from a peak of more than 2.5 million on December 22 to just around 100,000 on January 23. Still, the possibility of surge in cases as millions of Chinese travel home for family reunions during the ongoing Chinese New Year holiday. In the economic sphere, developments in China over the next 6 months will be determined by the difficult-to-predict course of the pandemic. Is it a return to a zero-COVID policy even possible? Rather unlikely. The government knows that things could be different in the first quarter and they are prepared for it. After that, forecasts are rather positive. Only in the case of an extreme scenario will reopenings be considered. Despite this, the decision to reopen is good for the economy, good for the capital markets, and good for deal executions. At the end of 2022, Xi Jinping walked out stronger from the party congress. His position as a leader is the greatest since Mao. But what does this mean for the Chinese economy? Two of the most important issues that emerged from the party congress: the focus on rebuilding China's development model and the opposition to separatist movements written into the party statute, which is more important than the constitution. The separatist movement means the Taiwan issue, which is certain to be intensified. Potential moves regarding Taiwan will depend on the strength of the West and the doings in Ukraine. If Russia changed the picture of the war and the West is too involved in the conflict and pays too much of the cost, this will be used by China on the Taiwan issue. Armed conflict in 2023 is an unlikely scenario. We already have a set of data for 2022 from the Chinese economy. How does it look and what are the forecasts? China, as a global factory with diversified energy sources, additionally benefits from the conflict in Ukraine by buying resources from Russia at lower prices. In addition to this, the lockdown in 2022 and the coming global slowdown has meant that China has not even for a moment had a problem with inflation. Readings have remained in the 1 to 3% range for a year, which allows the People's Banks of China to cut interest rates. After a 6-month pause in cuts, there is again speculation about possible cuts in interest rates. In my opinion, rather unlikely, due to China reopening, which will certainly boost domestic demand. Retail sales declined only 1.8% in December, while a larger decline was expected. Industrial production growth slowed to 1.3%, but also not as much as expected. According to official data for the whole of 2022, China's GDP grew by 3% in real terms. This is the second lowest growth rate since 1977. But it was mainly caused by the zero-COVID policy. What do these data tell us? If the above data are reliable, the post-lockdown rebound is definitely faster than anyone could have expected, and the outlook for the Chinese economy already looks optimistic in the coming months. Finally, one more interesting fact. The population of the People's Republic of China, still the world's most populous country, declined last year for the first time since the early 1960s. Paradoxically, China population began to decline with the abandonment of the one-child policy. According to forecasts, in 2023, the world leader of the list of countries with the highest population will be India. China's stock markets are currently after fairly sizable gains, while there is still room for growth. Significant market momentum is evident. Trees don't grow to the sky, but the long-term optimistic outlook for China's stocks could only be spoiled by even such a return to a zero-COVID policy or the specter of more total lockdowns. I rate as unlikely, although sickness spikes are still expected in the first quarter. Russian military aid or some other form of support by China. The reaction from the West will be immediate and further sanction packages will come in, which will negatively impact the Chinese economy. An unlikely scenario. Aggression against Taiwan. The consequences are so far-reaching that there is no point in even considering them. Extremely unlikely scenario for 2023. That's all from the Chinese economy. Thank you for watching.